Hey dividend investors, today I'm going to talk to you about trending stocks. We've all seen recently the big Reddit craze when it comes to certain stocks and certain sectors, but today I'm going to talk to you about how you can trade trending stocks. Now I'm going to tell you right now that I do myself trade with those trending stocks, but I've got a strategy that works for me and it's worked for me in the past. And of course it's worked for my dad because we've done a few trades together with those trending stocks as well. Now this strategy is basically this. You go in with an amount of money that is, you have to remember that any trending stock, whether it be Tesla, Gamestop, or whatever, it can all go to zero. You have to remember that. Now, Tesla is no longer going to go to zero. It's a fantastic company, and I think it's going to be worth a ton of money. I think it's going to be probably one of the biggest companies in the world in the future. But when it comes to trending stocks today, the GameStop trade, AMC, weed stocks, Bitcoin stocks, things like that, those are all trending trades right now. And how can you play them? Well, first off, only go in with the amount of money that you're willing to lose. So if you're willing to go in with $250 and you're willing to lose $250, do it. But if you cannot afford $250 or if you can't afford $100, do not do it. Don't go out and do what some of these people in the news have done. The news is going crazy right now with these kids or people who went in and said, I want to take a $20,000 loan to buy GameStop stock up at $400 and now it's worth $50. They just lost a ton of money and now, of course, their story is going to be trending because they were idiots. Now, what I'm going to tell you right now is, why would you go into any stock on a loan? I just don't understand that myself. It's way too risky. But from there, this is the strategy. So let's say, for example, you want to buy Sundial. And let's say you want to buy Sundial stock. Currently, Sundial stock is being currently traded at $1.60 per share. Now, right now, I'm going to tell you it's down today. At the time of making this video, it is down 12 cents. Now, at this time, you would say, well, this may be a good time to buy in, and I do agree it could be a good time to buy in. The current volume is 218 million shares being traded today. The average volume is 580 million shares. It's down today. So what could you do? Well, let's say we wanted to get in with, just to make math easy, $320. We were willing to lose $320. So what I would do today is to get in with half that amount. I would get in today and buy 100 shares if my limit was $320. The reason for this is because now I get 100 shares at $1.60. From there, if it goes up, I'm happy. If it goes down, of course, I'm not so happy, but I still have half of the amount that I want to put in. Let's say it drops down to $1.20 a share now, which I would not be surprised if that happened. I would then go in and purchase 133 shares. So now I would have 233 total shares. Whether that happens or not is up for debate, but either way, what we would have is 233 shares. Now, if it was to double from our average buy-in, let's say our average buy-in would be somewhere in that $1.40 range, just to make math easy. Our average buy-in is $1.40 a share. If we can get, or if we have that stock go up, which I think it will because of legalization, goes up to $2.80. At that point, I would start considering selling half of my shares. Once it goes, instead, to $3 a share, which would be a round number, and I like round numbers. It goes to $3 a share, that way I can make a little bit of profit as well. I would sell half of my shares. So that would mean I sell 120 shares. So I've sold, at that point I would sell 120 shares and I would make out of that $360. That now covers my initial investment and my commission, and I'll probably come away with a profit of $40 off that trade. But I still have 113 shares left in the company. If the stock doubles again, let's say the stock now goes to $6, which who knows if that'll happen, but let's say it goes to $6. I would now sell another 55 shares because it's doubled, so I'm going to sell half once more. Out of those 55 shares at $6, I would then have $330 again on top of it. So now, which means that I still have 53 shares left, and I have now profited $360 as well as $330 with my original investment being $320, which means that now I have made my money back and then some, with still 53 shares remaining. With the 53 shares left, what I would do, and this is different than, again, most people, is I would let that 53 shares ride until maybe it doubles again from 6 to 12, and I would sell half again. And if that was the case, we would then walk away with, let's say we sold 26 shares at $12. That would be another $312 minus 10 for commission. And then at that point, we would still have 21 shares left. And then you can let that ride till the moon, you can let it ride to the basement, whatever it is, you would still have your shares, some shares left. You don't have to be sad because you've made your initial money back, you've made other payments back to yourself as well, and you still have shares left. Now you're probably saying, well, I could have had an easy 300 and whatever shares, or 200 and whatever shares at $12. I could have held it that whole way. Why should I sell half when it doubles and half when it doubles again and half when it doubles again? Why should I do that? Well, I'm going to explain this to you right now. This is how I traded Aurora Cannabis stock back when the Canadian market was legalizing. This is also how I sold CGC stock, Canopy Growth stock, back when the Canadian market was legalizing it. This works, and I'm doing it now again with the weed stocks. And the reason why this works, and I've done it with some Bitcoin stocks as well, Hive Technologies, I just recently did that with, bought it at 2, sold it at 580, and now I still have half, and I'm still set, right? So this is how you should trade trending stocks, because you always have to remember that with trending stocks, that trend could stop and it could tank to zero. And any company that's not paying a real dividend could technically go to zero very, very easily. There's no underlying inherent value to the stock, and that's kind of Kevin O'Leary's thought, but that's also my thought. So this is how I like to trade trending stocks. It's almost a gamble, which, let's face it, a lot of investing is. You're putting in a couple of $100 that you're willing to lose. Once it doubles, get out half. That way you still have your initial investment and you still have it in your hand, and then you're letting the rest ride. This way you can protect your initial investment, and then you can speculate on basically free money. This is how you should be trading trending stocks. You should not be going in with $20,000 loans. You should not be going in with any amount of money that you cannot afford to lose. This is how I do it. I don't know how you do it, but I hope that this at least gives you some idea on how you can also trade trending stocks. I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.